Welcome to Compound Insights, a podcast by CFA Society New York. I'm your host, Gary Farber. Today, we're joined by two very highly regarded voices in executive search for the finance industry, David Barrett and Derek Braddock. David has more than 30 years of broad-based experience in senior-level recruiting. Before launching his own firm in 2005, he led the global asset and wealth management practice at Heidrick & Struggles, and he began his search career with Russell Reynolds Associates. Derek brings over 2 decades of financial experience in financial services. Prior to entering the executive search industry and founding his own firm, Derek spent more than a decade in sales, product management, and marketing roles at firms such as Lord Abbett and Solomon Smith Barney. In April 2024, Derek and David merged their own firms to form Braddock Matthews Barrett. David and Derek, welcome to the podcast.
Thanks for having us.
You both come out of industry, equity research and marketing, respectively, and now in executive search. Can you discuss a topic that investment professionals frequently think about, career transition, how to successfully navigate, and any lessons from your own experience in doing that?
Sure. I came from, as you had just mentioned, I came from the marketing and sales side of things. So, coming into search was, I think, a pretty logical extension because it, really focuses on the client-facing and relationship management side of things. And I also think, executive search, especially in the asset management side, brings a real level of intellectual stimulation, and that you're constantly, trying to stay ahead of, current trends, asset classes, strategies, functions, et cetera. So there's a lot to bite off. Actually, David and I met about 20 years ago when I was actually, coming into search, and he was working at a well-known boutique, and I think that's, that felt like the right path for me. Fast forward to now, just a little bit about us. David Barrett Partners built really the preeminent firm focused on the LP community. So, he and his team, brought in, the key CIOs to, leading endowments, foundations, and family offices. On my side of things, our firm, Braddock Matthews, was really focused on the GP side. So we were working very closely with the private equity firms, the private credit firms, the hedge funds, et cetera, and that type of community. And we really felt that the idea of us combining forces where you're mapping both the GP and the LP community would be really powerful. And so that's what we've established. We've got a great group of partners and staff working with us. We are a partner level led and partner level executed executive search firm, meaning, the senior people are the ones who, are, mapped to the success of that particular mandate. And we're very client centric.
Derek, so my transition into search, especially for CFA members, is somewhat illustrative of how to think about your careers. I was an equity research analyst, and I've said this many times, I quickly figured out I didn't have the attention span to be an equity research analyst, and I had gotten an MBA, I had not gotten my CFA. And this is, I think, important for CFA holders to think about, especially folks who are focusing on the investment side. What do you really like to do, and where are your passions, and what are you really good at? When I was an equity analyst, I realized, the in-depth analytical brief was not what I really wanted to do. I wanted to get into much more of a consultative relationship building sales role, and the asset management side of search brought that. That might be the totally opposite thing that someone with who really enjoys the analytical side would want to do. But it's I think as people are thinking about navigating their careers, early or mid-level, and really thinking, what are my strengths, especially if they're starting on the investment side? Am I really a differentiated talent in the investment area? Or should I really be thinking more about maybe moving into a client relationship role or product role, something like that? So just really being self-aware around your strengths and your passions in terms of what you want to do. If you don't get up every morning and devour the Wall Street Journal and love spreadsheets, for a lot of your members, that's something that, you really need to think through.
And what about networking? How crucial is networking in making that transition, do you think?
It's interesting. When I got into search, everyone thought you just did dinners and lunches and networking. And this candidly ties into how institutional the business has gotten and how specialized. So, in the last 15 years, so the lunch, dinner, networking thing, it's important that you're known and credible, but the industry has gotten so specialized. So whether it's folks coming who are focusing in asset management in the Shrek firms, the large global firms, or in the boutiques, they really build up their industry credibility through execution and through client work. So yes, participating in things like this and going to conferences is valuable for us, but as it relates to search, it's not critical. If you're talking about for your CFA members, networking is important. It's important to go to conferences and be seen, but at the same time, you don't want to overdo that. But you definitely, I mean, we'll get into sort of career path and how to think about diversifying your skill set. But an important part of that is getting known in the industry.
Okay. Compared to prior employment cycles, I mean, how do you think this one shapes up?
Derek, you want to talk about the GP side?
Yeah, I think I think it's really as vibrant as ever, but I think it's shifted a bit as to where the opportunities are, currently. So I think if you look at on the GP side, as we're all reading about, private wealth has exploded. I don't know any mid or large size business that haven't invested heavily in sort of private wealth, and that's only going to continue with the news with the 401ks opening up to privates. That's going to continue to be a huge trend. Private credit, we're all hearing about as well. That continues to remain very strong. Private equity, there are some firms challenged from a fundraising standpoint, from, an exit standpoint, but that has not slowed down substantially. We're actually seeing kind of an increasing amount of activity in the hedge fund side. This year, we're more active on the hedge fund side than we probably were the last 2 years. So there aren't too many bad spots in the asset management world right now on the GP side.
But again, take a slight step back. On a secular basis, and this is not new news, the long-only world is consolidating and getting tougher and tougher to be competitive. So the demands are still high, but all that demand has moved over, as Derek said, to the wealth side and to the illiquid side. And that's where a lot of the new money is going, or not, existing money is flowing into those areas as well as new money. So in terms of the search levels are very high. They've just shifted away from the traditional long only shops into the big alternative shops and the wealth platforms. And then on the LP side, the good news for us is that it's not cyclical. It's captive capital. They have to invest their money in good times and bad, and it's not they're not worried about active fees versus low margin passive fees. It's a focused, very focused investment proposition where they always need talent. So and then there's new entrants. So you've got the endowments, foundations, hospitals, OCIOs exploding, family offices, new sources of capital there every day. So and they're becoming more competitive around compensation. And you combine that with captive capital, no pressure on marketing and sales, and compensation is more and more comparable to the GP side. There's a lot of growth there, both at all levels: analysts, asset class heads, and CIOs.
And Derek touched on the hedge fund industry is showing strong demand. Can you sort of elaborate there? Is like what's driving that, and do you think it's sustainable?
Yeah, well, I think there was, if you look at portfolios, let's say on the LP side, at these endowments foundations, you saw a dramatic shift from liquid assets into privates, and some went overboard with that regard. And I think we're just in an environment where some of these pools of capital are reconsidering getting more exposure sort of in the public markets. And that, by the way, that is not a U.S. centric answer. I think a lot of people are heavily invested in Europe and other parts of the country, but we're seeing a bit of a tilt back there. That the allocation that these organizations have into privates remains a massive part of their portfolios, and that's not going to change, and it probably will even grow. But I think there's a little bit too much of a tilt away from, public equity type investing, and I think people still want that exposure.
Okay, great.
And there's a little cyclicality there too, where the different styles within the hedge fund universe are starting to come back. But
And what about specific roles like CIOs, analysts, investor relations roles? Are you seeing stronger demand in some of those areas than others, or?
Yeah, we're seeing, David had talked about sort of the specificity of hiring today, and I think that's an important theme because you could go back a couple of years ago and these organizations would say, go find me a private credit focused investor. Now they're saying, okay, go find me an asset-based focused private credit investor. On the IR side, organizations would in yesteryear look for a generalist focused institutional marketer. Now they're looking for a marketer, let's say, focused on the family office channel or the insurance channel. So I think there's just more of a specificity in the hiring, meaning, because all these different functional areas have evolved to such a degree, our client organizations, if they want to stay within their lane and look at people who have just done this particular discipline, they can find those people. So that I think that just, I think there's just been a lot of more select hiring in certain sort of sub-asset classes across private equity and private credit in particular.
And that gets back to the specialty areas of expertise on the search firm side. I mean, and that's candidly why we merged, because we're, this convergence of on the GP and LP side, you have to be able to access talent in all those different areas, but on a very specialized basis.
Yeah, and that convergence, that's another huge theme. So just to drill into that a little bit, so why are these LPs and GPs sort of potentially converging? And if you think about it, LP roles can be very attractive to folks sitting in the GP community. As David said earlier, they're going into an environment where there's a captive pool of capital. They don't have to worry about fundraising and things like that. They can focus on a pool of capital that's already sitting there. And more generally speaking, going into an LP community, you have a bit of a broader investment remit versus what you can do versus probably a more linear role at least some of these GPs. And then, LPs are attracted to GP talent for a number of reasons as well.
They love the direct experience.
Yeah.
Folks who have taken risk, been burned, and they're now going to the allocator side. They've been on the other side of the table. They understand all the different factors. And the compensation is getting better so that you can compete for that talent.
Yep. Yeah, it's really the direct underwriting capabilities. More of these LPs they're doing direct investing, they're doing co-invest. They're not just selecting managers, so they want that kind of skill set coming from the GP side.
And as the drivers and inputs of stock market or just market performance overall continue to expand, what kinds of risk management leaders are most in demand today, would you say?
Well, I mean, both on the GP and the LP side, risk is, for the last 20 years, has taken on a hugely important role. And I'd say that, the demand only increases. I think where you've seen, the public markets risk management function has been very sophisticated and very active for 20 years. And I think you've seen more and more of that in these mega alt shops that are more illiquid focused, but they're building in much stronger risk processes and bringing in much more senior leadership. I think of some of the larger alt firms or sophisticated family offices that are mostly illiquid driven and private equity driven, but they're over the last 5 years, you've seen a lot of increase in the building out of the risk function.
And the investment industry, obviously global in nature. Your team is both in the U.S. and London. How is the globalization of capital markets affecting executive talent flows?
Yeah, I think we're still, I think we're still seeing firms that have, local expertise as it relates to, certain markets. So, I think there is, convergence in some way as it relates to organizations as they build themselves and make sure they're one cohesive group. But, you still need boots on the ground, and you still need people that are focused on particular regions and industries within those countries. So, that kind of continues. I think, look, we could pontificate on what's going to happen with Europe and other areas. I think, Europe is showing signs of improvement. I think it was a little bit slower for a little bit, but we're seeing a lot more attention there. The Middle East, has absolutely exploded. A lot of that is, fundraisers going over there to try to, pull, capital from these massive, sovereign wealth funds and other, but that's also a growing area.
Yeah, and in terms of, the talent moves, do you see talent flowing into the Middle East and sovereign wealths? I would say it's actually in some ways slowed on the traditional asset management side, where, I worked in Singapore for Russell Reynolds. I won't say when, but not this century. There was a lot of the U.S. or North American and European money managers were moving talent around Asia and from U.S. into Europe and Europe into the U.S. And I think again from a career planning perspective, I can't tell you how many folks I talked to who were North American in Asia working for the J.P. Morgans and the Goldman Sachs asset managements, the BlackRocks of the day, and they didn't have any career path back home. And so I think that the executive talent flow has become a little bit more thoughtful. I'll put it that way. Where you see some movement between London and New York, and they will move people internally out to Asia, but I think it's much more thoughtful and not as pervasive as you used to see. And the big alts firms, if you think of the Blackstones, the KKRs, the Carlyles, the Apollos, there's some movement, but it's limited.
AI, topic of the day, the year, and possibly next century. How prevalent are new executive roles or responsibilities emerging around data science or AI, do you think, at this point?
Well, a couple things, especially for your members. I think AI is actually going to help your members in the context of their job contents and their career potential. I think, and especially in the sectors where I think the CFA is most relevant, which is in the public markets, investment management, research areas, obviously the asset owners, the E&Fs, and then as Derek's mentioned, the wealth and the private banking areas. The CFA is still the gold standard, but with AI, they're getting all that data mining, number crunching stuff is taken off their plate. So now, and it's going to affect every aspect of the investment management business. And it's just in the early stages, but we're already seeing it in the context of for folks developing their careers. That repetitive data-driven stuff is gone, and the CFA folks are moving up the food chain in terms of their ability to focus on more judgment-oriented roles, the risk management function, innovation, and a much more top-down decision-making versus just the number crunch. So I think it's going to be, it's going to change everything. But within the investment management business, I think it'll raise the functional value of the investors in the space.
Yeah, I would just add that, and I agree with all that I think anyone entering the asset management world needs to have some type of a technological underpinning to, what they do. And, we're all learning this real time with what's happening in AI, but our clients are telling us that there's not any functional area within their businesses where AI won't touch it. So that means, operations, record keeping, investments, marketing and sales. And so having a savviness around that is going to be absolutely crucial.
I couldn't agree more in the context of the CFA is still the gold standard. But as you're thinking about your career path and developing skill sets, you have to supplement that with technology, data, and strategy. And if you're not thinking broadly like that, you'll get overly siloed.
Any other sort of potential innovations that you've come across or potentially see out there that could impact your industry, executive search, or the investment industry that the people aren't talking about big enough yet, but could become big?
Within search, the lower mid-market, through LinkedIn and other technology-driven solutions are being more and more prevalent. In terms of what we do at the high end when you need that person-to-person individual touch, yes, obviously this AI and the ongoing access to information is helping us identifying folks and research. And but in terms of what we do on a day-to-day basis, which is, we're finding people who are not interested in moving to go to different and you have to have that personal contact. So the executive search business will become more and more specialized at the mid to higher level, but that you can't do that electronically. You can't do that.
And more of a sort of housekeeping item, really. Attitudes towards remote versus hybrid work, has that shifted permanently in financial services? I mean, what do you think is the norm going forward?
Yeah, I think it's been a complete pendulum shift since COVID, meaning, most organizations are really pushing for sort of a back to office type of setup. I think there are a lot of learnings from, the hybrid or remote situations, idea sharing, relationship building, culture. A lot of that was lost. And candidly, I fear for that younger generation of folks that haven't had time in an office and realize the importance of those things. I personally think it's a real red flag when I'm interviewing someone for a certain mandate and the first thing they say is, how many days a week can I work from home? I think those folks aren't getting it. And I think it's really going to be a career killer if, that's your MO.
Yeah, and I agree. I mean, if you look at the high performance organizations, including J.P. Morgan, Blackstone, others, and we see it on the LP side, they want people in the offices, and if it's not 5 days a week, it's a 4-day a week minimum. And when we are talking to candidates about, I'd love to do something that's 50% virtual, that's 90% of the time that's off the table. So the pendulum has turned.
What's your advice? Investment interviewing can be multi-rounds, pretty rigorous. What's your advice to your candidates as they head into that process? What kind of things should they be thinking about?
Yeah, I would say a couple things. One is, if I was an applicant for a particular role, I would welcome additional conversations with folks at that firm, because I think at the end of the day that, the cultural fit is, really I think the key determinant factor on someone's longevity and success at a firm. So the more you get to know an organization through that process, the better you're going to be and have more conviction on if you want to join that firm or not. I would also, just simply speaking, I would say that, going into these interviews, especially as you have multiple rounds, I think it's really worth gleaning, some comments that someone had made in a previous conversation and applying that to the next one, showing that you're listening, you're understanding, what their differentiators are, what their culture's like, and you're applying that to next questions, just showing a general interest. I think those are key.
Yeah, I mean, we haven't talked too much about culture, but that is the key differentiator for any candidate should be thinking about in terms of his or her next move. And so really, to Derek's point, really exploring that in the process and getting comfortable with that. I mean, in today's market, compensation is table stakes. It's really about the culture and the career path. And so making sure you're really doing your homework there and getting to know the organization, making sure you're going to have the right mentor in place when you join. And as Derek says, really asking all the right questions as you go through the process. And it is time consuming, but actually, because of Zoom these days, I mean, you can cover a lot of ground and it's not nearly as time consuming.
From an employer perspective, what are the keys, do you think, for them to have a successful talent search?
A consultative, thorough market review, when either on your own or with an executive search firm that you trust in terms of their knowledge of the market, their access to talent, and then trusting your search firm to make sure that they're doing the proper due diligence on the candidates and their backgrounds, and getting to making sure they understand you well, so that they can evaluate the candidates accordingly.
Yeah, and I think this sounds painfully obvious, but it's crucial that any employer looking to make a senior hire, that they are lockstep with what they want in that hire. We've seen situations where you get retained on a mandate and as you learn along the way, there's just different viewpoints as to what people are prioritizing in the ideal candidate versus what someone else on their team might be. And yet, if you can avoid that, you're much better off. You want to make sure that
have a clear vision going in. Yeah, that's critical.
Both of you have extensive experience in this industry, and I'm just wondering if you're willing to sort of take your crystal ball out and take 5 years out. What do you foresee for the investment industry? How do you think it's going to look broadly?
So I'll let Derek finish with the GP side. That's probably evolving more. The asset owner LP side, and so we're talking, sovereign wealth, pensions, endowments and foundations, hospitals, family offices. OCIOs are the exploding intermediary. This area in 5 years is only going to be much bigger and much more competitive, and their ability to recruit world-class talent is only going to continue to improve. As we've touched on some of the issues wide around captive capital, pure investment propositions, and compensation is getting more competitive with the GP side, combined with quality of life, et cetera. And the amount of new money that's coming into these areas, especially the wealth side and the family office. So that area is going to continue to grow. The investment opportunities for CFA members is going to continue to be very significant, and the CFA is going to be important. It's an important credential in that space.
Yeah, and I agree with all that, and I would just add that, in 5 years, I still think a similar principle will apply, and that being the successful firms will have a key differentiation in what they're doing, versus their peer group. And by the way, that could mean different things. That could be performance. That could be, having a great culture and people knowing about it. That could be, they're further along from a technology standpoint. It could even be size, even though that tends to not be a long-term play to success. But, without a differentiation where you're falling in the middle of, the niche boutiques who everyone really knows what they do, and the large mega firms who have that scale and size and name, if you're in the middle and you don't have that differentiation, it's going to be tough to succeed.
Yeah, and it's not new news, but it's that barbell. The big global alts firms and then the specialty boutiques, and it's those long-only managers in the middle that are trying to find their way. And some will make it and some will get, merged up. But that's the evolution over the next 5 years.
You're both in the market every day, very close to what the trends are and what the opportunities are. What's the last sort of best advice you can offer to our members as far as sort of, how to pursue your careers and how to find new opportunities, for allocators, for direct investors? What should they be thinking about?
Yeah, I would just say, find what you love to do and stick with it. I think we see, we all read the same newspapers and stories, and we all hear about, where inflows are going and what's a hot area. I candidly see too many people trying to follow that rather than, really understanding, what do I like to do? Maybe this strategy that I love is not in vogue right now, but I think that's a better path towards, finding what's going to be a career home for you than trying to chase something that might be a little bit hotter right now.
Yeah, and I mentioned it earlier. I mean, to Derek's point, figuring out what you'd like to do and what you're good at and really passionate about. On the allocator side, the one thing I'd say sort of technically is making sure as Derek mentioned, on the allocator side, you're getting a broad exposure across asset classes. Make sure you continue to get that. Don't just be the hedge fund due diligence guy. Get experience across the public markets, private markets. Get some board management experience. Get some top-down risk experience. Diversify your experience set in your different organizations, because that will much better position you to be looked at for a CIO versus someone who's spent all their career in one asset class.
David, Derek, thank you both for joining us today and for sharing your perspectives. And to our listeners, thank you for tuning in to Compound Insights from CFA Society New York. We'll be back soon with more conversations with leaders in finance. Until then, I'm Gary Farber, and thank you for listening.